India's apparel industry is expecting better times. With reciprocal tariffs on India by the US now less than a month away, as per President Trump's promise on Tuesday, exporting industries are obviously and furiously examining the options and opportunities if so. There are a lot of granular details on what India could give in exchange, for example, reducing duties on import of cotton from the US in exchange for leniency in apparel exports. Now, how this will exactly play out is not clear, but not just to me, but to people in the industry as well. On the other hand, export of garments jumped to $1.6 billion for the month of January. This is not likely to be a record high, but is definitely a high, particularly for recent times. Prabhu Dhamodharan, convener at the Coimbatore-based Indian Textpreneurs Federation, which represents close to 450 spinning, weaving, apparel, and home textile companies, told me that Indian manufacturers have actually stepped up their imports of machinery in recent months in anticipation of increased business, which would suggest that in an era of uncertain tariffs, the apparel and textile industry seems to be more confident of growth than maybe other industries, at least going by that one metric. I reached out to Mr. Damodharan and I began by asking him how the industry was gearing up for the latest deadline of April 2nd for reciprocal tariffs and how that could roll out for India given all the other tariff wars that were going on.
Actually, now everyone realizing that trade war is real. So we are getting flood of informations on a daily basis, and every country, every sector will try to minimize the impact and also look for opportunities. Particularly now the recent announcement on the tariffs on Mexico. Mexico is 8th largest exporter to US and around $4 to $4.5 billion of apparel and non-apparel textile items they are exporting every year. Suddenly, the tariff will make the products expensive, and particularly if you see the product segments, around $2.5 billion of cotton apparels they are exporting, and around $1.5 billion of cotton apparels and $1 billion of MMF apparel they are exporting. Naturally, immediate reaction will be buyers will look for alternate supply chains, and naturally cotton apparel will come to India and Bangladesh, and MMF apparel may move to Vietnam and Cambodia. This is what the Mexican tariffs will make trend clear, number one. Number two, this is current month trend. We don't know what will happen next month. Compared to it's a relative terms, we are now cheaper. After some period of time, things may change. Now, Mr. Trump not applying his mind on connected countries like Vietnam. How the connected countries they are going to treat, we don't know. And the reciprocal tariffs also, he clearly mentioned that for India also, they are looking for reciprocal tariff. And within the framework, there are two options for them. One is for applying, for example, if we charge 15% for a particular good, and they will also charge 15%, that is one methodology. And second methodology is if we take the average tariff of a country, our average tariff for US will be in the range of particular person, and their tariff may be lower. So the difference tariff they may impose as a methodology too. And in both scenarios, apparel, we expect that 5 to 6% impact will be there for Indian apparel. So it's not massive. And in both scenarios, definitely we will have an edge compared to China, Mexico, and even other countries. So definitely by going with the current trend, we are confident order flow will increase to India. This is what we are getting the feeling from the buyers, and a lot of rapid inquiries are coming to our own members, and industry is so active now, everyone expecting surge in orders in the near term.
Can you put this in context of overall Indian exports and the latest numbers to US and overall garment exports?
Indian numbers, first time the January, we witnessed the $1.6 billion of apparel exports from India. Normally, our monthly run rate used to be in the range of $1.2 to $1.3 billion. It's a healthy sign. We need to see whether we are sustaining it. I am confident with the plus or minus 2-3%, we can sustain the momentum. From here, if we take $1.5 to $1.6 billion as a base, we need to reach $2 billion a month. That is what the real growth is, what we are expecting. And for example, now every developed market, we can see a very similar trend. Developed markets don't grow beyond 1 or 2%. For example, a recent data of 2024 of European Union imports, they imported around $92 billion with a year-on-year growth of 1.3, 1.5%. So all developed markets will grow 1 or 2% only because of the massive size. So only which countries grabbing other countries' market share, that is where the game is there. And how industry is equipping now, We are seeing a lot of activities on expansion space also. Even if we look into the data of recent import of sewing machine, knitting machines, you know that a lot of apparel making machineries, including processing and knitting and sewing machines, we are still import dependent. The April to November, we imported around $1.18 billion of this kind of machinery. That means industry is gearing up for expansion. Particularly the knitting machines year-on-year growth is in the range of 26% and sewing machines in the range of 27%.
So this is not replacement.
No, replacement may be a minimal because last 2-3 years already rapid investments happened post COVID also. So majority of even we had our channel check with machinery importers at the ecosystem. Everyone is telling that factories are expanding. Everyone drawing up their plans to that is much needed because India needs scale, competitiveness, specialization. This is right time actually to scale up and show the buyers. One of the very important thing is China will be always capacity ready, and whenever inflow comes, they will be ready with option A, B, C, D, E. And we need to follow that methodology in apparel. We can't say that you give order and then we will build capacities. Now opportunity will be definitely there. Even with the end of all these noises around, we feel that relative terms we will be least impacted in apparel. I don't know about other sectors. Maybe some sectors have their own concerns, but apparel and home textile and textiles, definitely this will be a positive sign. And very, very important factor, we need to go to the US with our wish list, and also we need to give some kind of a benefit. For example, US cotton, if we import, we are imposing 11% duty. Now the China is going to already announce that they are imposing duty on US cotton. So US need customers now. Cotton is a very, very sensitive crop in US. So US need India to sell their cotton. What we need to do, our policymakers can take this as an advantage and reduce import duty on cotton and ask the reciprocal methodology or something. We need to ask, please reduce on our apparel. So that in one stroke, we can bring a win-win situation by reducing cotton import duty and asking them to reduce apparel duty for us so that we can create more jobs at one stroke.
When you said about the run rate of about 1.5 to $1.6 billion, that's total apparel exports, right?
Yes,
And of that, how much would go to the US?
around 30-35% we always export to US. Recent times, little increase and quarter of 30-35% of our dependency is there with US.
How much of our cotton imports are we sourcing from the US, roughly?
Cotton imports very minimal. We majority few variety of cotton like used in home textile, very fine varieties we used to import from US and Australia. But the numbers are very minimal. We depends mainly South India. We all importing majority with African cotton. Because now the 11% import duty created a turbulence. Because now 11% import duty, it may not be viable for us to import. Now few African nations, due to the facts whatever we have, the duty is only 5.5%. So now the industry is using that as an opportunity and importing from African countries.
And of our total cotton consumption for apparel or textile, how much are we importing as a percentage?
Around 10% to 12% to 15% year on year, it will change, but 10 to 12% we used to import.
I think balance 90% or so is met through domestic product.
Yes. We are one of the largest cotton producing country. Farmers also well protected with MSP. MSP is now the higher than the world prices, and farmers are getting very fair prices. And we have a robust sourcing mechanism also with the CCA in place, Cotton Corporation of India. So cotton ecosystem is farmers also well protected, and government also taking a lot of efforts to improve the yield of farmers. They are taking it as a mission mode now. So it's right time to rebalance because raw material stage we should not tax more. It's right time to use this crisis as an opportunity and reduce the duties for import of US cotton and get the benefit in apparel.
Right. Thank you so much for joining me.